Good afternoon, Professor. My name is Gianni Macchio, and today I will be talking about my final project, which was going into the New York Stock Exchange and the Beijing Stock Exchange, and comparing and contrasting both of them with SWOT analysis, as well as going over some recommendations that I have made at the end. So to start, what is a stock exchange? Well, a stock exchange is where different financial instruments are traded, including equities, commodities, and bonds. Exchanging brings corporations and government together with investors. And it can also help provide liquidity in the market, meaning there is enough buyers and sellers so that traders can possess efficiently without delays. So a quick overview of what the New York Stock Exchange is. So it opened in 1792 on May 17th. It is the largest stock exchange in the world by far and has a market capita of 28.4 trillion US dollars. And a very interesting fact is that it had once closed for 4 months in 1914, which I was not expecting at all. So, a quick overview of the Beijing Stock Exchange is that it opened in November 15th, 2021, which is a very, very new market. It is the third stock exchange for the China mainland and has a capita of around 45 billion US dollars. So now I'll be talking about my SWOT analysis for both of them. So what a analysis stands for is that strengths, weaknesses, opportunities, and threats. Strengths and weaknesses are often restricted to companies' internals, such as resources, skills, and limitations, and the opportunities and threats are factors that are analyzed in a view of prevalent market forces and other factors such as technology, political and legal, environmental, social, health, and safety, and economics. So I will be talking about the New York Stock Exchange first for my SWOT analysis. So as for its strengths, it is the largest market in the world. It has a strong social media presence that can enhance and develop efficient relationships with customers. Advanced integration IT infrastructures can improve the operational efficiency and increase knowledge of the largest market trends. And it is the strong financial position and health of it can allow a firm to further invest. So a lot of firms have a lot of confidence in New York Stock Exchange because it is the biggest stock exchange in the world right now. There's a lot of money going through and out of the market, and if you're going to invest, this is definitely the place that you are gonna put your money into. So as for its weaknesses, expenses, it is very expensive, and it is around for the fees, and it is around 295,000 and an annual listing fee for around 71,000. It is not electronic and it still operates based on being on the active trading floor, which is pretty crazy to me, but it just shows you how big this market is and you really can't change it too much at all, otherwise it might suffer. It only allows companies with 100 million or more of value in outstanding shares and is very high tax on stock transfers. So for its opportunities, continue to merge with other stock exchanges like they have already been doing with the Euronext, and the ability to go electronic. So for the threats of the New York Stock Exchange, inflation continually to grow higher, which we've all known this for a while, and it's affecting everybody, not just the stock exchange. New York lawmakers want to increase the tax on the stock transfer, which is pretty crazy to think about. And growing stock exchanges as well as new stock exchanges are definitely some of the threats that pose to the New York Stock Exchange. So now we will be going into the SWOT analysis of the Beijing Stock Exchange. So as for its strengths, being in China, there are now new uh, trade boards. Excuse me. New third board. Um, it is big support from the Chinese government and is pure excitement for Chinese population with low fees. So for its weaknesses, um, it always has a question of whether there are new companies and if they will survive in that type of market. Only available for Chinese residents currently. Chinese markets are typically only dominated by retail investors, and all Chinese stock markets are relatively new. So, as for its opportunities, more business are available to be incorporated because it is so new. Targets and small companies need to be able to get into this type of market. It allows for big swings daily, which could be a good and a bad thing because it could be very risky for investors one day, but it could be looking great for investors another day. So, and it can always open internationally, which they should probably do if they want to create a dominant market. So as for the threats of the stock exchange, is that there are way bigger stock exchanges out there, like example the New York Stock Exchange, and there is always a fear of like um, war with other Chinese stock markets. So since they have three of them, so one can outleg the other, but it is just a matter of time of which ones have the better assets in them. So, addressing the New York Stock Exchange weaknesses. So, it could lower its fees if they really wanted to. Could lower the rule on companies having to have over 100 million in outstanding value. And if the fear of higher tax becomes a major concern, they will have they will have to move to the states, and as well as see the love of technology to grow, and they can become electronic. Becoming electronic is probably the biggest opportunity that the stock exchange has, but it is just unclear of whether they will do it or not. So as for the stock exchange weaknesses for Beijing, is that the exchange should open internationally. Chinese government need to make it more apparent in instructions and institutions to get involved into the market, and more force needs to be put into the stock exchange market as Chinese markets only have opened since 1990. And these are my sources. And thank you for listening, Professor. And I hope you have a great holiday break. Goodbye.